All right, good morning, and good morning. This is Helen Thomas from the CDFM study group. Welcome. All right, so the purpose of today's session again is for us to go over the CDFM Module 3, Competency 1 from the 2020 study guide. This session is being recorded, so as you are giving feedback, once you're done, please make sure that you mute your mics so that we do not capture that on the video later on. All right, so let us begin with 3.1.1. If you have any particular questions while we're going through, please stop me. Let's talk about it to make sure you understand. If you've already taken Module 1, which I'm hoping most of you have, if not, you will see as you get to Module 3 that some of the information overlaps because fiscal law, if you look at the breakdown for the exam, you will see that fiscal law accounts for the majority of the questions in all three of the exams. And what you will also find is that information overlaps in all three modules. So what am I saying? I'm saying before you take your first exam, or if you've already taken one and passed, good. But before you take your second one, make sure you read through all three modules looking for similar topics in all three sections, because you'll see that in one module, it might be one page on continuing resolution, for instance. And you go to module 2 or module 3, and you might find 4 pages on the same topic. You can be tested on those 4 pages, even if you're taking the module 1 exam. So it's best to just look at the study guide in its entirety, and then you focus on your particular areas. Does anyone have any particular question that may be beneficial for the group before I begin with the fiscal law? Okay, I don't see any hands. I do see one. Mr. Clifton, Mr. Harrison, go ahead, please. You're still on mute, Mr. Harrison. We can't hear you. So if you go ahead if you have a question.
Good morning, ma'am, or should I say good evening where I'm located.
Evening, okay.
I'm kind of new to this whole CDFM, and I was wondering, I heard you speak about people taking module 1 or may have already taken module 2. Is there some sort of order that I might want to try to do this in, or is it okay that I am now newly starting with module 3? Does it make a difference?
It does not. And actually, module 3 might be best because, like I said, the majority of the questions on all 3 exams comes from fiscal law. So it'll help you there. I usually recommend module 1, then module 3, then module 2. But again, there's no particular order that you have to go in. Module 2 for me goes to the back end of the process because it contains a lot more information than the other 2 in order for people to remember. And most people, because you don't work in that area, then it's not as easy to remember. It takes more time to study. So you will not go wrong if you start with module 3. No. Okay.
Okay, thank you.
Okay, you're welcome. All right, so let's jump into page 3.1.1. That's your learning objectives. Again, this study group, I'm not going to read it page by page. That is your job to read page by page. I'm just going to highlight some areas because to be successful on the exam, you have to comprehend what is going on. It's not just memorizing what's on the pages. So even if you hadn't done module 1, what you'll find, as you can see what's going on around you, is Congress controls the funding, the appropriations. And so they place restrictions on the use of those appropriations, whether it's no funding for your program, or they'll limit how much you can spend on a program. They control the funding. And how they do that, they apply the fiscal law guidance is what we're going to go over. The power of the purse is they give you the restrictions, and then we have to stay within those guidelines to be able to use those funds accordingly. And so if you look on that study guidance, my only reason for stopping on this page is because it talks about the fiscal law competency deals with the financial manager's knowledge of law regarding availability of appropriation as to purpose, time, and amount, applicable comptroller general decisions. I'm going to stop right there. Does anyone know what a comptroller general is? Because often you're going to see either the acronym CG or you see the words comptroller general. If you see an acronym, you need to know what it stands for.
Is it head of GAO?
Okay, outstanding. Yes, ma'am. All right, so the comptroller general is the title of the individual in charge of the GAO, the Government Accountability Office. So Congress says, here are your do's and your don'ts with these appropriations, and then they go about their business, and then the GAO works for Congress. That's that external auditing agency that audits the executive branch. They audit the budget. They audit us to make sure that we are following the processes and the guideline established by Congress. So that is why on page 3.1.1, you see the applicable comptroller general decisions. That's GAO decisions. So comptroller general is the head of the GAO, Government Accountability Office. I just wanted to point that out to you. So moving over to page 3.1.7, fiscal law and the financial manager. And so you see the slide that says the basic idea behind fiscal law is Congress has to give us the ability in writing to do something with an appropriation, to spend it in a particular way. It is not that, well, if they don't talk about it, then I can use the money to do it. Other standards are like that. I know in uniform, we used to say, well, hey, if the military standard doesn't cover this particular topic, that must mean I can do it. It's not the same for financial management. So that's the basic axiom. Every appropriation has a specific purpose, time, and amount, and they're based on various authoritative sources. On page 7, they have a list on that slide. The Authorization Act, the Appropriation, the Constitution, general statutes, CG decisions, that's that same CG we just talked about. Comptroller General, CG is not commanding general. So make sure you don't get confused if you see that again in the future. On page 8, and so the reason I suggest Module 1 first, because you would have learned in the constitutional authority, Article 1 governs the legislative branch, Article 2 governs the executive branch, and Article 3 governs the judicial branch. So if you see a question and it starts off with Article 1, you automatically will know they're addressing Congress. This is saying something that Congress is allowed to do. So let's look a little closer at section 7, 8, and 9. What does section 7 allow Congress to do? And anybody can answer.
Raise revenue.
Who said that? That was kind of quiet.
It was me, Vincent Davis.
Okay, so raise revenue, and it talks about the process for Congress pass and for the president signing, veto, and so forth, that whole bill process that you would cover. That's why I say you got to review all the modules, because in module 1, they'll talk about how a bill becomes a law and how that whole process works. All of that is covered under Article 1, Section 7. What else is covered in Section 7? In reference to the presidential action to sign or veto a bill. Mr. Rodriguez? This is part of module 1. That's what I'm calling him. No worries. All right. So in Article 1, Section 7, if you also look in module 1, it'll also tell you part of that presidential action. If the president gets a bill and he does not sign it within 10 days and Congress is in session, that bill will automatically become law. All of that is covered under Section 7. So when it says it delineates how bills will pass from Congress to the president for signature or veto, that part of the president signing or veto, all of that is Section 7. Then you have Article 1, Section 8 says Congress can collect taxes. Article 1, Section 9, if you just pass Module 1, they did not cover the Clause 7, but here it says Article 1, Section 9, Clause 7. This is the constitutional authority that says if we do not have an appropriation law in place, the government must shut down because we cannot take any money out of the Treasury. So it says it requires appropriation in law before you can take any money out of the Treasury. I'm just paraphrasing. With these, read it as is and then put it in your own word. Because if you see it on an exam again and it's written as is here, you may be confused if you didn't already associate what the words mean. Does everyone understand what I'm saying?
Yes.
Okay, thank you. All right, so on the bottom of page 318, it talks about the GAO principles. And so if you're starting with module 3, if I didn't tell you who GAO was, then you need to know what GAO stand for. So Mr. Clifton, what does GAO stand for? You need a lifeline?
It stands for Government Accountability Office.
There you go, right? So anytime you see an acronym, don't just assume you know what it is. Make sure you spell it because on the exam, they may or may not have it in acronym. If it's in an acronym and they ask you what does GAO stand for, then you need to be able to know that. All right, so because GAO works directly for Congress, they have the most authoritative source of information on how we can use the appropriation. So in the study guide, you're going to look at 3 different GAO books. So I'm going to give them to you. So just think of a stoplight. You have the GAO red book, the GAO yellow book, and the GAO green book. That's the stoplight, right? So it tells you on the bottom of page 8 that the red book deals with federal appropriations law. So anything you want to know about the appropriations from the GAO perspective, you'll go to GAO red book. All right, so what do we cover in GAO yellow book?
Auditing.
Auditing. And green?
Internal controls.
Internal control. All right, so, and again, when you're studying, you cannot just focus on what's directly on that page. You have to recall information from the other modules or the other pages because they overlap with each other. They're not separate information. So that's why I'm giving you the stoplight example, because you're going to run into the other 2 later on. GAO red book deals with appropriation. GAO yellow book deals with auditing. GAO green book deals with internal control. Let's move on to page 3.1.9. You have several laws and regulations listed here. I'm going to point out the last one at the bottom there, the Budget and Accounting Act of 1921, because several things came out of it, and those particular entities or agencies are repeated multiple times in the CDFM. So the first one under the 1921 Budget and Accounting Act says it requires the president to submit the annual budget to Congress. And when is the budget required to be submitted? Who can tell me that? It's not on a page.
No later the first Monday in February.
No later than the first Monday in February. So I'm just filling in some gaps. So under the 1921 Budget and Accounting Act, the president is required to submit the budget to Congress for all three branches of government. So the budget is either the federal budget, the president's budget, the press bud, the nation's budget, whatever you want to call it, the one budget. So whenever you hear a statement that the GAO audits the executive budget, that is correct, because the budget comes from the executive branch. So just kind of see how those two things overlaps. The second bullet says it created a budget office for the president. And the budget office for the president is currently called OMB. It's an acronym. What does OMB stand for?
Office of Management and Budget.
All right. Mr. Vincent, you kind of slow on the draw there, but I'll get you next time. All right, so so you have the president's got to submit the budget every year. You got the establishment of the Office of Management and Budget. That's the resource manager for the executive branch or the president. And then the third one is the establishment of the GAO, the oversight body for the Congress. So if you notice, it used to be called the General Accounting Office. GAO used to stand for General Accounting Office. Then in 2004, it was changed to Government Accountability Office. So that's why I say you need to know what the acronyms mean so that you don't give them what it used to be called, you give them what it's currently called, Government Accountability Office. On page 10, at the bottom of that description for the law, OMB circular. So we just talked about the establishment of OMB, Office of Management and Budget, that works directly for the president. So we get circulars from Office of Management and Budget. So GAO gives us the books, OMB gives us circulars. OMB circular 811, and it tells you the description there, but basically what it's saying, it instructs us on everything: budget formulation, budget execution, processing, all of that is found, the OMB guidance, OMB circular 811. Any questions on the laws? All right, page 11 talks about sources of authority on the use of public funds. So as you know, when we receive our allotment, most of us get allotments, is we commit the funds, we obligate, and we disperse or we outlay. And so fiduciary certifier is certifying that you're using the right fund. The right fund is available. So you can associate a fiduciary certifier. Fiduciary starts with an F. Fund starts with an F. Certifying funds. The act of commitment. Commitment is administrative reservation of funds. That means I'm setting money aside for a contract. I'm saying, yes, we have X amount of dollars in O&M funds to do this project. So if I'm certifying, I am a fiduciary certifier. So that's an example of fiduciary, is one who approves a commitment. Then a pecuniary certifier, I'm certifying the payment of those funds. So that's the individual who certifies an obligation. I'm writing it in my book in case you're wondering what I'm doing. That was a light bulb that came to me a few days ago. I was like, oh. And pecuniary also means, because you're certifying the actual disbursement of those funds, is you can be held liable for paying back money if it turns out that something was done illegally or improper or something down the line in an investigation. So your two certifiers are fiduciary, pecuniary. Fiduciary certifies the funds, such as in a commitment, and pecuniary certifies the payment of these funds and through the obligation process and disbursement. All right, page 12. Again, power of the purse for Congress says that every appropriation has a specific purpose, time, and amount. And typically in our work areas, we talk about anti-ADA violation, Anti-Deficiency Act violation, but we never go any deeper than that. What am I violating? Am I violating purpose, time, or amount? And so on page 12, that particular chart, make sure you know in the Anti-Deficiency Act law, 31 U.S. Code 1301, so that's what, chapter 13, I guess it's paragraph 1, covers purpose. 31 U.S. Code 1502 is time, and amount is 1341, 1342, and 1517. And so what you're going to need to know as we move along and we go through each one is what are they addressing? All right, who can tell me the funding flow? Starting when Congress appropriates the funds, what happens? Because you have to know that process to know when am I in violation of 31 U.S. Code 1341 versus 1517. And we'll come through that. We'll answer those questions as we move along in the process. All right, so availability of budgetary resources says that some appropriations are annual, multi-year, and we do have some no-year appropriations. So they have no-year authority. On page 13, you have 31 U.S. Code 1301, appropriations shall be applied only to the objects for which the appropriation were made, except as otherwise provided by law. That means whatever it is I'm trying to buy, that particular appropriation must be, the description of it must be exactly what I'm buying. On the purpose, you have general operating expenses and you have specific authority. So they gave you some examples of the general expenses. When you go TDY for training, those are general. But you may also receive specific purpose authority to do specific things based on the Authorization Act. What is the purpose of the Authorization Act?
Authorizes the program.
Authorizes, there you go, Mr. Vincent. Thank you. Authorizes the program. Because again, everything that we do within the Department of Defense, we must be authorized to do that in some law, some policy, or some guidance. And so the Authorization Act provides specific guidance. Appropriation Act, what does that give us? And we're still waiting on.
It's to give us the funding part of it.
Give us the funding, gives us the money. Because it doesn't matter if the authorization lists funding in it, it still does not give us any budget authority. And then you have the CG. See how it's done? CG decision is Comptroller General. Any decision listed by the Comptroller General. Those are specific. On page 16, when you're looking at purpose, you also have to apply the necessary expense doctrine. So 3-part test. That means you're trying to figure out, okay, what type of appropriation should I use to do that project? Does that expenditure bear a logical relationship to the appropriation I'm trying to use? The expenditure must not be prohibited by law. Did Congress already say, no, you can't buy this item? Or the expenditure must not be provided elsewhere. Is it through the supply channel? Is it provided elsewhere? So these are questions, 3 questions at least that we should ask ourselves as we're trying to determine the right appropriation. So the necessary expense doctrine, all of that is associated with purpose. All right, which Anti-Deficiency Act covers the purpose statute? Check on learning. Now I'll give you the
No.
first part, 31 U.S. Code. Go ahead, Ms. Christina. Go ahead, Christina.
Is it 1502?
No, purpose. Let's stick with purpose.
3101.
1301, is that what you said? I'm sorry. Let me turn this. These laptops are so low.
It's
All right.
31 U.S. Code 1301.
Okay, there we go. Thank you. Yes. So purpose is covered on the 31 U.S. Code 1301. Now on page 17, we're flipping to the next side. Time. Every appropriation has a specific time. 31 U.S. Code 1502, Chapter 15 is what the 15 means. The balance of a fixed term appropriation is available only for the particular timeline in which it was granted to you. And we'll look at that in a little bit. So that's when you can enter into new contracts. So when you're looking at time, you have to consider the bona fide needs rule on page 18. So if what it's saying is you're supposed to use current dollars for current year projects or whatever requirements you have. Understanding that you're going to also have exceptions to those policies. All right, so bona fide needs rule. On page 19, they talk about service. So the bona fide need will apply in a sense. If you have severable service versus a non-severable. A severable service means that, like a cleaning service, means if I end the contract early, I still would have received a benefit of that contract up to that point, versus a non-severable. A non-severable contract means that I have to pay for all of it because I need to complete the whole work to get a benefit out of it. Any question on the difference between severable and unseverable contracts or service? Go ahead, Mr. Vincent.
Yes, I get the serviceable part, but the non-serviceable part. For example, if you have a contract that started in February FY24, it must end September 30th FY24, but non-serviceable, it only lasts that from that time period, the 9-month time period.
Okay, let me continue, and then let me circle back to you. Let me know if I answer your question. So there's a couple of things, because that's exactly what you're trying to figure out is when do I obligate and how much can I obligate? If you have first you need to know the difference between the services. So if you have a severable service and it's 12 months or less, it doesn't matter what time of the fiscal year it is, you will obligate current funds for the full amount up to 12 months. So let's say it's August and it's a 12-month contract. It starts August of this fiscal year to the next fiscal year. You can obligate the full amount of that contract because it's a 12-month contract. The flip side is, let's say in the contract it said it's a 13-month contract. You can still obligate 12 months worth of current funds, but anything above that for that 1 month, it'll be subject to availability of funds. Now let's go to the non-severable. Because you know the definition of a non-severable is I need the whole work to be completed. However long it takes you to complete it, I need the whole work completed. So by knowing the definition, then you will also know that even if it's August and I have a non-severable request, I need the whole parking lot paved to get all those potholes out of the parking lot. I can obligate the full amount of the contract in August to get that job done. Because a non-severable is not going to be a 12-month, a 13-month, a 15-month contract. It's not a recurring thing. That's also what I need to state here. Non-severable is how long is it going to take you to complete this task? All right, I'm going to pay you for whatever it's going to take. All right, Mr. Vincent, did I answer your question?
So yeah, make sure my mic is on. Okay, so basically a non-servable is a government will obligate the entire amount for the contract.
Exactly.
So until the
And like I
project
said,
is completed.
yes, sir.
Thank you.
And again, that's going to that's why I started with the definition of what they are. Because like I said, a severable one, which usually have subject, what does it say? Convenience of the government, we could end the contract whenever we want to. Meaning, even if I ended in the second month, the first month they came in and clean. So I got something accomplished then, so I could end the contract. Versus training, as they list in this paragraph on 19, training is a non-severable. Because oftentimes when you go to, if you've been to any training, they have a training schedule, a training plan. And you got to complete day 1, if it's 5 days, to day 5 to get that certificate. So you got to pay for the whole training. Most for the military, you pay at the back end once you're done. But understanding that that whole process has to be completed, so you will pay for the full amount. Whether you pay before or you pay after, you pay for the full amount. All right, so that's as deep as we're going to go with the services. All right, permissible actions on page 20. So as stated, if we do not have an appropriation at the beginning of a fiscal year, and we're operating under continuing resolution, we often have the second bullet on page 20 where it says subject to availability of funds is placed in a contract. You know, they start the contract paperwork, but you can't make any payments out of it because you don't have any appropriation. Okay, got you, Ms. Griffin? Hold on one sec. And then the first action says, okay, so let's say in September, Congress appropriated the defense budget for FY25, let's say. So that means in September, the KO, they can actually enter into a contract, start in a contract, list the appropriation. They just cannot start paying out anything until you receive that new appropriation. All right, go ahead. Ms. Griffin?
Yeah, I hate to be redundant, but how I remember the difference between severable and non-severable where I first started, because I was very confused, but I was told the same, like you said, severable is separated. The service and the work can be separated. Non-severable is where the service and the work cannot be separated.
Separated.
That kind of helps me remember as I do my daily work.
Okay, that's a good one. You know, I'm writing it down. All right, so non-severable, I cannot separate the work. I got to complete all of it. All right, thank you for that little nugget. All right, page 20, and then the first bullet is, again, so you either have an appropriation before the fiscal year begins, or you don't have an appropriation where you list subject to availability. So those are the two permissible actions dealing with appropriations at the beginning of a fiscal year. Or on page 21, obligation rules if you have a contractor termination situation. I have a contractor that started a job as the contracting representative, the COR. I'm doing these checks and I realize, oh, you're not meeting the standards of the contract. And so the contractor can be fired. However, if you have accepted any work from that contractor, they have to be paid. So you work with your KO or contracting officer to determine how much you got to pay that contractor. Then how do we get the job done? Because we still have a requirement. What do we need to do then if we have a contractor default? And we still got a requirement.
Terminate it.
Okay, so once we terminate them, and we still got the requirement, what do we need to do? The commander still need that job work done. So if you fire a contractor,
contract.
you got to get a new contract. With what funding? Everything we do is always going to be tied back to the money. Go ahead, Ms. Clark.
The same year funding.
Okay, so we're using, actually, let's look at it as remember, every contract has an approval document, approval packet that goes with it. Some commanders, some leaders, some GS signed off on that particular requirement for X amount of dollars. And if you have a contractor default situation, they're fired. If you still have a bona fide need, then you can get a replacement contract utilizing the same approval documents. The issue comes in is we always have great ideas after the fact, and you cannot come in now on the second round and say, hey, let's add this particular, we didn't think about it the first time. Let's add some more work onto this performance work statement. You can't do that. So if you're going to change the scope of the work, then you have to go back through the approval process to get it approved. So you may have to increase the funding to complete the work, but the bottom line is the initial is to use the same approval documents to get a different contractor. And then if that particular contractor requires additional funding, you request additional funding. The key is not to exceed the original approval document. Don't go out of the scope. Don't start adding new things because it was already approved for a particular purpose. And then you have convenience of the government. Most of the contracts, actually all the contracts I've read, typically have that clause in there to allow the government to break that severable service whenever necessary for convenience. So those are the obligation rules for contractor termination. So we cover ourselves with the convenience of the government. And then on 22, we're going to start talking about the life cycle. So remember, we're still under time, 31 U.S. Code 1502. So it's going to require you now to go to page 23 and make sure you know that MILPERS and O&M are both 1 year annual appropriation. They are expense type. RDT&E is a 2-year appropriation. Procurement is a 3-year appropriation. Shipbuilding, conversion, Navy is a procurement, but it's a 5-year appropriation, and military construction is a 5-year appropriation. The importance of knowing that information is in a couple of pages, we'll do some exercises because they're not going to come out and say, okay, is MILPERS and O&M a 2-year appropriation? And you say, no, it's a 1 year. It's not going to be that simple. Don't forget you're certifying. It's a certification exam. But what I want to point out in addition to this on page 23 is O&M. You can use O&M dollars to do minor construction up to $2 million. Likewise, you can also use O&M dollars to procure systems $250,000 or less. So you have that exception to the policy. If it's, let's say, if the construction is over $2 million, then you need military construction dollars. If the procurement is more than $250,000, then you need procurement. But it's saying if it's under those 2 thresholds, you can use O&M dollars to make those purchases. So I always point those out because you can always confuse those with MILCON and procurement. And then you have another appropriation on page 24. It's called a no-year appropriation. What is an example of a no-year appropriation?
Defense working capital.
The Defense Working Capital Fund. And what are you talking about, Miss Helen? All right, so no year mean it doesn't expire. It just revolves. Every year the money they charge customers. So let's an example is your commissary. My favorite one I go to is the commissaries take their money just like the civilian side does. Take their money, buy the food item, buy the stuff in the commissary, put it on the shelf. Based on what it costs them to put it on the shelf, they come up with the price to charge the customers who come through the commissary, and it revolves every year. What is the difference then between the working capital fund and the civilian sector? Because that sounds exactly like what the civilian sector does, right? They take their money, they buy the items, put the items on the shelf, charge the customer pays, and it revolves. What is the difference then between the commercial side and the working capital fund? What is the goal of the working capital fund? Go ahead.
The goal is to break even, not to make a profit.
There we go. That is the biggest difference is on the working capital fund or the no year, the goal is to break even. So I think the commissaries, they charge a price. I don't know if, yeah, I think it's annually, or I don't know if it's either annual or fiscal, but the bottom line is if the next year and the next year they continuously make a profit, then the prices have to drop at some point. They have to have this type of action, that bell curve type action with their expenditures, because the goal is to break even, not for them to make a profit on us. So one year you might go in the commissary and your ribs is $5, and then next year you go, it might be $10 or it might be $2, type of thing, because all of that is dependent on how they perform historically, because if they get checked, then they cannot continuously, it's in violation of that particular no year appropriation if they consistently make a profit off of us. All right, now there are two reasons why or how a no year appropriation can be closed, can be shut down. So remember I said they don't go back to Congress every year to get appropriated funds. They continuously operate, but there are two reasons or ways in which they can be closed. What are the two ways?
The fund has carried out its purpose, and the head of the agency or Congress determines that. And then, if there have been no disbursements within 2 years.
Okay, so no disbursement, thank you. There's no disbursement within 2 years. Nobody buying anything from the commissary the last 2 years, or the agency. An agency for us is Department of Defense, or the president says, yeah, we don't need commissaries anymore, in my example. So two ways to close a no year fund, because even though they operate on a revolving process, they still have guidelines they have to follow. They still have restrictions in how they spend, what they spend, how much they spend. So it's not like they operate independent of what's going on with Congress and so forth. All right, so page 25, what that is telling you is the information that is on page 23 can be used to ask you a question. And so I'm going to go through a few examples. I'll give you all a few minutes to kind of work it through and provide a response. All right, if I tell you, you just received procurement funds. Today is 3 December 2005. When will these funds be closed? I'm going to let you all write it down, then we're going to go through the life cycle. And then I'll let you work it. Again, you just received procurement funding. Today is 3 December 2005. When will these funds be closed? Hopefully you wrote it down. So let's talk about phase 1, phase 2, phase 3. And phase 1 is saying, based on the type of appropriation, MILPERS, O&M, RDT&E, they're in those phases 1 year, 2 year, 3 years, 5 years. They are available for new contracts, new obligation. When they enter into phase 2, every appropriation stays in the expired state for 5 additional years. So if I have a MILCON in phase 1, that's 5 years. And so when it expires, it stays for another 5 years. So now we're up to 10 years, and the 11th year is closed. What can you do with an appropriation when it's in the expired state? Like, what can we do with FY23 funding now?
Payments and adjustments.
You make payments and adjustments, upward or downward adjustment. That means I have to already have the funds obligated in the previous year. And then all I'm doing is, hey, they're returning funds or they're requesting additional funding. So those transactions stay open for that 5 additional years. Phase 3, the funds are closed or canceled, like we're currently closing out FY19. Once 1 October comes this year, those funds in our accountability evaporates. Where do the funds go? Where does the canceled funds go?
Miscellaneous receipt.
Oh. Thank you. The miscellaneous receipts in the treasury. However, if you read under that phase 3, and you'll see it again on page 27, you have a 1% rule. That 1% rule says that if you receive an invoice for anything that was to be paid with that FY19 funds or that canceled year fund, you can use up to 1% of current appropriation, the same type, same color of money for the current year to pay a bill. Because like I said, if it's a small amount and you say, hey, let me help this contractor out, I have it in my accountability, I can use up to 1% to pay that bill or refer them to DFAS. All right, so that's phase 1, phase 2, phase 3 of the appropriation life cycle. All right, now let's go back to my example. Again, you have procurement funding. You received, today is 3 December 2005. I got you, Miss. Oh, Shakisha. 2005, when will these funds be closed? Go ahead, Shakisha.
I do have a question with the 1%. So say it's closed and you send the funds back and an invoice hit. Where does the 1% come from? Where does it come from exactly if it's not available against the funding document? Does it come from miscellaneous funds or from I'm not sure how that works. I was just wondering.
The 1% comes out of whatever you currently have. So let's say is FY24 and you just received a bill from, we closed what, 18 last year? So FY18. I can use FY24 funding up to 1% of the same type of appropriation to pay that invoice.
Okay.
So the 1% is of current funding.
All right, thank you.
Okay. All right, so who has an example? Who has an answer for my practical exercise? When is it closed? What fiscal year? Vincent?
I knew he was going to say me. I knew he was going to say my name. So for if it's FY06 and the procurement is 3 years, that will take it to FY09. Then you add the additional 5. So
Stop right there. From FY06 FY7, how do you get to 09?
Well, okay, so basically it's 3 years.
Hmm?
So it's the beginning of FY06, so it's take 3 years.
So
So
just
it's
think of it's the entire FY6.
FY6.
Yeah, don't look at it from the beginning to end. FY6, FY7,
7,
and FY8. That's your third one.
and okay. Then the 5 years, it will be in the second phase, we call it
Mm-hmm.
phase 2.
So what are
So
my fiscal years there?
like I said, it'll be FY13, right, ma'am?
So, well, 9 through 13, because remember you got to account for the 5 years. So FY9 to FY13. Those are my expired state.
Okay,
So
so
then when is it closed? Go ahead.
so it'll be finally closed FY13.
Everybody agree, disagree?
It'll be close 14 because the FY13 was part of the expired period of the 5 years.
Okay. All right, Vincent, you want to look, we looked at? So let's walk through it. Again, you said it's procure. First of all, you need to know what fiscal year you're in. So we said we're in what fiscal year?
FY06.
FY06. So FYs, we're going to start with fiscal year 6. So just think of the whole fiscal year. Don't break it up. And with procurement is a 3-year appropriation, correct? So it's FY6, FY7, FY8. That's phase 1. Then it's expired FY9, 10, 11, 12, 13, from 9 to 13, and then it's closed 14.
Okay,
Tracking on that one?
tracking.
Okay, y'all want to do one more? Because this is how you make see that material again. Like I said, it's not gonna go like the chart on 23, but your knowledge of the information on 23. All right, let's do one more. All right, so it's November the 10th, 2012. You have shipbuilding conversion Navy funding. When will these funds be closed? Again, today is November the 10th, 2012. You have shipbuilding conversion Navy funding. When will these funds be closed? And everything is fiscal year.
Fiscal year 23.
Okay, I got one for 23. What else y'all got? Anything different than 23? Anybody need some more time? All right, I don't see any hands. All right, so FY23, those funds will be closed. So the funds, so first of all, we are in fiscal year 2013. So we start with 2013, 14, 15, 16, 17, because shipbuilding conversion Navy is a 5-year appropriation. Then it stays expired for an additional 5 years from FY18 to 22, and then it's closed FY23. All right, too easy. All right, so everything we did start on page 26. We just did it, and 27 at the top, the 1% rule is listed there also, and what you do when it's canceled. And let's see, does it say? Yeah, I'm trying to see if it where it tells you what happens to the funds, but it's just because we know that it's returned to the treasury. Because don't forget, the money came out of the treasury, so even if you didn't see it, know that it's returned to the treasury once it canceled. All right, so that's all that deals with 31 U.S. Code 1502, which deals with time in the use of these appropriations. So on the bottom of page 27, now we start with amount. 31 U.S. Code 1341, 1342, and 1517. So let's look at 1341 on page 28. An officer or employee of the United States government may not make or authorize expenditure or obligation exceeding an amount available in an appropriation or fund for the expenditure. So it's saying I can't spend in excess of or before I receive appropriation. And based, let me see how far back. Okay, when we get to page 33, based on the funding flow, you will know who, once it says that somebody violated 31 U.S. Code 1341 and it's reported to higher, then you'll know what are they violating. They're violating appropriation, allotment, apportionment. On page 29, and I think they're missing one because the older study guide had 6, and it mentions 6, budget authority. So it says 6, if you read the bullet, it says should be 6 budget authority, but they only listed 5. So I have, it's appropriations, contract authority, got that, borrowing authority, offsetting receipts, loan, monetary credit. So you may want to write it in your book because it looked like they missed it, but they said it was 6. So the 6th one is monetary credit. Let me write it. And that's listed also in the older study guides. So you have 6 budget authority. Everything we do with an appropriation, everything we do with taxpayers' dollars, we have to have the authority to do so. So make sure you know what the 6 are, because I just gave you the 6. So if you have a multiple choice and it says which one is not a form of budget authority, you'll be able to pick out the one that doesn't match. If you're like me, I like to put stuff in alphabetical order. Like I think it's comes out to ABCLMO, or the acronym. It's easier to remember. All right, so when you deal with amounts, when Congress, the power of the purse, that control on page 30, they have earmarking, control that they place on funding. Ceilings, make sure you know the term. Ceiling means you cannot spend any more than this amount on that requirement, because I want to make sure you don't spend too much. Or if I want to make sure you spend money on a project, I will give you a floor. You have to spend at least $1 million on construction. Or fences, you fence the funds. Most people are familiar with fences. So 31 U.S. Code 1341 deals with violating or excess of appropriation. On page 31, it deals with 1342 voluntary services. And what you will see, if the compensation, so I'm reading the bullet, first one, is a position is fixed by law. If I have a GS position, it's fixed by law that this particular job is a GS job. I cannot have someone come in and volunteer their services because, hey, I'm the spouse of so-and-so, or I just relocated and I want to keep my craft up. I can help you guys process some unliquidated obligation, some ULOs. You cannot accept volunteer work for a position that is fixed by law. That's one rule. The exception to that is the second one. If, as the manager, the boss, the director, the supervisor, you have the leeway to lower that particular position compensation to 0, then you are authorized to accept voluntary services. Or you have to be in an organization that already have the statutory authority to accept volunteers. And they give you examples: Red Cross, Candy Stripers in hospitals, museum volunteers. So in the most part, if it's fixed by law, you can't change it, no volunteers. You will violate 31 U.S. Code 1342. So any question on that? Pretty straightforward. And then the last one that deals with 31 U.S. Code 1517 talks about apportionment. That means I can't spend in excess or before I receive my apportionment. The key to knowing the difference is page 33, the funding flow. Congress appropriate funds, then it goes to OMB, then OMB apportions funds to the agencies such as Department of Defense, and then they take their apportionment and they issue allotments where we commit, obligate, and outlay. So outlay is the same thing as we would say disbursement, but the official term is outlay, and it's listed at the very last bullet on page 33. When the funds are used to liquidate an obligation and the money comes out of the treasury, which is a disbursement, then it's called an outlay. And so to violate 31 U.S. Code 1341 means that I'm violating the use of the appropriation. So that means it trickles up and it goes to OMB, who will violate 1341. Now, it doesn't mean because we get allotment that we can't violate these ADA. It just means that most likely if your hire can fix it and it was an error, they'll fix it. You use the wrong appropriation, the wrong amount or whatever, or you use O&M funds to do a construction that's over 2 million. That's using the wrong appropriation. And you didn't have any construction dollars anyway. Or you violate apportionment. So while I'm here, when Congress appropriates the funds, like hopefully they'll be able to do in the next few weeks, FY24, before we end the fiscal year, two things are going to happen. What are the two things that happen once Congress appropriates the fund? Who can tell me?
The warrant is issued, and then the agencies have to send the SF 132, I believe.
Mm-hmm. All right, you're on the right track. Keep going.
And then the apportionment comes from, gosh, I forgot who.
Somebody help her out there. She got it. You're right there.
From OMB.
OMB,
Okay.
that's what I thought, but wasn't sure.
Okay, and how
And
long
then,
does OMB have to give them the apportionment?
is that 30 days?
30 days, right?
Okay.
So tell the story, like the whole story.
30 days,
then
and then
go ahead.
then the agencies get their apportionment. Oh, the DOD gets their apportionment, and then from there, the different components get their allotments, and then from there, I want to say the commitments, then the obligations, and then the outlays, which could be disbursements.
There you go. So every
Okay.
time you talk about fund flow, walk through the whole thing. So it
Okay.
makes it easier for you to recall when you get an exam. You don't have to second guess yourself because you tell the story so many times. It's like second nature, right? So that's two things happen. So once Congress appropriates, the Treasury warrant is the legal part that's tied to Article 1, Section 9, Clause 7, because the Treasury, hey, the law is in place, the bank account set up, your account set up, you can start spending new fiscal year funds. And the apportionment process happens on the OMB. So I say that's the admin side of it, I guess, because it's not actual money, it's those documents. And then we commit, obligate. So we get allotment, the agencies, remember, it's not just Department of Defense, all those other departments, State Department, Department of Education, all of them are agencies, they get apportionment. So you're gonna have to know the difference because they all start with, those three start with A, and just know the order in which they occur: Congress, OMB, agencies such as the Department of Defense. All right, 34 talks about augmenting, and it talks about the miscellaneous receipt statute, that 31 U.S. Code 3301. That just allows the Treasury, as the funds are canceled, that's where they go. They legally can augment the Treasury because the money goes in there. We talked already about the purpose statute, employee compensation prohibition from outside sources. I don't know what that one is. I don't go into details with that one. All right, gifts on page 35. Can we accept a gift from a contractor? if you're a government employee, can you accept a gift from a contractor? And if so, what are the restrictions? Or are there any? Can I accept a gift from a contractor? Go ahead,
Yes.
Mr. Okay, yes,
And
and
you have to
go-
apply the 2050 rule, which is 20 per item, not to exceed 50 in a year.
okay, so yes, you can accept gifts. The single value of that gift, if I'm getting a pen, it can exceed $20, and within an annual year, the total amount of gifts cannot total more than $50. So gifts. Gifts to employees. If you notice on the bottom of page 35, even though you're in module 3, competency 1, they're telling you, go back to module 1, competency 2, manpower management, for more information on gifts to an employee, because actually they didn't really tell you much. But what you'll find when you go to the module 1, it talks about gifts from what is it? Let's see. Gifts to your supervisor. Let me put it that way. $10 limit is what is placed on employees who want to donate gifts to a senior individual. ADA penalties. So we talk about all these Anti-Deficiency Act 31 U.S. Code on page 36. If it's strictly just an ADA violation, you have administrative versus criminal penalties that may be assessed. Administrative can be a write-up, retraining, or removal from that job, versus criminal if it's deemed that, yeah, you meant to use O&M funds because you knew Congress did not appropriate, or we did not get any MILCON. You did it on purpose. It could be you made an error. $5,000 fine, 2 years imprisonment, or both. Again, a lot of times when you see these ADA violations, there are other things going on which is illegal. And so most of the time, those people get more than 2 years because it's more charges than just, hey, you committed an ADA violation. ADA reporting. If you identify an ADA, and you know it's, I can't dodge this one, it says that you have to notify your hire within 2 weeks of discovery on page 37. And in that same paragraph, you must complete a preliminary review within 4 months of that initial discovery. So those are the 2 things I pulled out of there. I identified that I violated purpose, time, or amount, 31 U.S. Code 1301, 1502, 1341, 42, or 1517, or one of the other ones, because those aren't the only ADA. There are other ones out there. Those are just the primary ones that you may see. I have 2 weeks from discovery to notify my hire. And once the notification trickles up and goes back up to OSD, then I also have to complete that preliminary review within 4 months. And it talks about all the stuff that's got to be included in that preliminary review. Is there relief, ADA relief? Let's see. In view of the explicit provisions of 31 U.S. Code 1351, it has been held that there is no private right of action for declaratory, mandatory, or injunctive relief under the ADA. So it's not automatic. An ADA violation could be, hey, you made an error, maybe I didn't notice it was $251,000 procurement, but I used O&M funds. You could see that. You didn't catch it, but it may still be an ADA violation. So it does automatically mean it's a relief because they're going to investigate later on. And GAO.gov is where you can go and you can see some of the ADA violations if you're curious. As I pause here, let me think. Yeah, let me say it now because I'll probably forget. Is With these study guides, if you notice when you receive these books, you have a glossary, you have acronym, you have another budget concept book in the beginning. You have laws, regulation, policies, circulars, DOD instruction. The expectation is for you to read those. Realistically, can you? Do you? Most people don't. So the information that is in the book, you have to understand it, comprehend it, flip to a different page, recall it, tell the story, and understand it good enough so that even if you see those extra little one question here that like, that was not in the book, I don't know what they're talking about, it won't throw you off where you're like, oh my God, I can't remember nothing. So I just want to make sure I put that disclaimer out, because I do have sometimes people come back and like, hey, that wasn't in the book, and they tested me on it. And I promise you, you reach out to ASMC and they're going to say, go into Article 1, Section 9, Clause 10, and they'll have a way to tell you where the answer is there. That's how they cover themselves. So you can't complain and say, hey, that wasn't in the study guide, because that's not going to fly. But yes, you can pass the exam with just what's in the book by understanding. So that's why I do what I do. All right, page 39, criteria. As you know, in order to obligate the funds, all they're saying is you have to have the obligating documents to record your obligation. The principle on page 40, the concept of obligation, must be charged against the right appropriation. Again, purpose, time, and amount. That's why we're looking at fiscal law. And we should be very understanding of what a continuing resolution is, because we can't seem to get away from it on page 41. What you need to understand is what is a continuing resolution. It's a temporary appropriation. We don't want the government to shut down, so we give you a CR for a certain time, and you are restricted to last year's spending. It's a stopgap. You have to operate, what is it? The same rate of operation on page 42, 43, rate not exceeding current rate. In the extent that an agency has no more funds in current year under the CR than they had available in the prior year. So you got to keep within those guidelines. There is on page 44, rate of operation exceeds final appropriation. So if you obligate at the current rate and Congress finally appropriates at a lesser rate, have you committed an ADA violation? The answer is no. As long as you're operating under the rules of the CR and Congress comes back later and appropriate, that means OMB is going to have less to a portion, DOD is going to have less to a lot to the rest of us. And they're going to have to stop doing something. So there's no violation there. What is considered a new start? Because I had a discussion with someone today. Since we're all under a CR, I kind of want to hear your perspective. I know what the book says, but on your perspective, what is a new start?
If the appropriation was was not available on that prior year, then that would be considered a new start.
Okay, if we didn't receive funding for that appropriation, right? And for CDFM purposes, new start is, let's say Congress did not appropriate for a particular mission or a particular program last year. Then this year, I cannot then execute that program. Even if this year they authorized it in the authorization law, I can't spend any money on it this year. It's a new start because I didn't get it last time. So that's how on the last paragraph, it talks, page 44, talks about new starts there. The term refers to the restriction on the use of funds for any project or activity for which appropriations or other authority were not available in the preceding fiscal year. They didn't authorize it in FY23, and you're operating under a CR, so you can't use it. So it's a little bit more different when you come down to the allotment. When we talk about new starts, for the most part, the guidelines that I've always been held to is if we didn't do it last year, then we're not going to do it this year. It's a new start for this year. All right, sequestration on 44 is automatic spending cuts whenever you hear sequestration. And don't forget, as we're unplugging, the State of the Union address is tomorrow. And in Module 1, you'll learn about State of the Union address. The purpose of it is for the president to let the Congress, to let the people know his or her priority for the upcoming fiscal year. So it's good to watch. You kind of hear. I get my popcorn nowadays. It's when the election comes because it's comical. All right, let's see what else we got. Page 47 talks about who is an accountable individual. Accountable individual, government employees. These are the individuals who actually disperse the funds, collect the money. They actually deal with the money. That's how you can think of accountable. Certifying, dispersing. They're the last step for that money going out. Illegal, improper payments. Okay, 48, y'all can read that. 49, advanced decision. If you don't know, if your command gives you requirements and you have a question in which appropriation to use, it's saying that you can go to your ethics lawyers, is who we normally go to, your JAG, your legal folks, to get an advanced decision on, hey, can we actually ethically use this appropriation? But I will tell you, even if you use your lawyers, that's why we got to learn fiscal law as financial managers. You are still that final person that's clicking that button, and your name will stay on those transactions for as long as they're out there. Relief of accountable individuals on page 50. The Comptroller General must grant relief if it's a physical loss. You did everything that you could, but because of mission or whatever, the loss was not a result of anything you did illegally, or payment was not the result of bad faith. The certification of payment was based on official records. Somebody brought you a lease to get funding or to get housing allowance. The document looked real. Hey, you paid it to them, then you didn't do anything wrong. So if the Secretary of Defense, now delegated to DFAS, determines that all of these criteria apply, the Comptroller General must grant relief. That's the very end of page 50. So DFAS is the agency that will do all of that investigation. Make sure you were authorized that payment. And finally, on page 51, statute of limitation. If it's an error, fat finger, whatever else, 3 years from the time the Comptroller General receives the account. So it's not 3 years from once you did the transaction in GFIPS or whatever systems we had before GFIPS. It's 3 years from when the case gets on the desk of the Comptroller General. Or if it's fraud, there's no time limit. So that's why you got to make sure whatever it is that you sign off on. All right, on the next 52, 53, 54, you have chart with fiscal law terminology. I want to bring your attention on page 53 in the middle to a very popular one that comes up. And this is probably the only spot where you're going to see it. 41 U.S. Code 6301, Feed and Forage Act. This is the law. Remember, typically with fiscal law, you cannot spend appropriation before you get it. You can't spend money in excess of what you have. However, under the Feed and Forage Act, it allows the Department of Defense to incur obligation to spend money in excess of what they have available. The condition is if they're, let's say they're deployed somewhere. We just had an earthquake somewhere, hurricane, whatever the disaster, fires, they go. It's excessively cold. They don't have all the right gear. We got to buy it. We don't, all of those things that we weren't funded for. So if you read it, you'll see it says, incur obligation in excess of available appropriation in procuring or furnishing clothing, subsistence, food, forage, fuel, quarters, medical stuff, transportation, all the stuff that they have to protect our military personnel and to get the job done, not to exceed the necessities of the current. So whatever they need until the funding trickles down later. And of course, you got to do cost capture under 41 U.S. Code 6301. The authority, let me read the last sentence or the last couple sentences on that. 41 U.S. Code Feed and Forage. The authority of 41 U.S. Code 6301 cannot be used to circumvent the provisions of 31 U.S. Code 1517. What was 1517 talking about? We're almost done. What is 1517 talking about?
It's in reference to the apportionment under the amount rule.
Right? So remember, DOD gets apportionment. So what it's saying is you can't, well, I don't want to follow 1517. So let me cite 41 U.S. Code 6301 so I can get away with spending more than I have, but you don't have a valid mission. That's like using your travel card and you're not TDY, right? You can't circumvent that rule. So that's what they're saying. And the final one says, DOD policy is that only DOD may authorize the use of 41 U.S. code. So we cannot just randomly say, yeah, this is feed and forage expenditure. Is we got to get approval from DOD level to use this particular funding under this law. So 41 U.S. Code Feed and Forage Act 6301. All right, this looks like we are at the end of the fiscal law portion of module 3. What are your questions as it pertains to anything we have covered? No questions? Okay, go ahead, Mr. Davis.
Yeah, I have one. Just make sure there is a difference between these two words or terminologies. Reapportion means that once we apportion it, we'll reapportion it to our subdivisions or agencies below us. Reprogram is not the same thing, correct?
You say reapportion?
Reapportionment.
Where do you see that at?
Basically, I did not see. I saw it in the book once. So
Or is it on a portion? Maybe you're thinking on a portion? Because I do recall unapportioned. Because I don't think I've seen reapportioned. Because it doesn't, yeah, because once you apportion, you're not going to apportion it again. Because you apportion and then you give allotments under that. Now, the term you may have seen is what is an unapportioned amount versus an unallotted amount. That was module 1, I think, and 2.
Okay. So
But if you find it, please reach out to me so I can make sure I find it and I'll recap it next week when we go over the second part.
Will do.
All right. Yeah, definitely. Yes. I want to make sure we're capturing those and answering all those questions. All right. Any other questions? All right. I don't see any other hands. Well, all right. Well, that concludes our session for today. I think I'm fiscal law up here for the last 3-4 weeks. I've been covering fiscal law. All right. Thank y'all so much for coming by. If you haven't already subscribed to our YouTube page, please consider doing so to bring more visibility to our YouTube channel. Refer the channel to other people as they're studying for their CDFM. It's become now that that discriminator, I guess, if for lack of a better word, because now most of us have to be FM certified in DOD. So if everybody has the same requirement, then what separates you from the next person may be that CDFM. And if you have CDFM and you're not already a GS personnel, when you do transcribe over, you will automatically be FM certified with the CDFM. So you wouldn't even have to go, because we used to have to do both. Now they use the CDFM to cover whatever level you're in. So you're already golden. All right, that's all I have for today. This is Helen Thomas and the CDFM study group. I'll see you guys again next time. Thank y'all. Recording stop.